Dividend investors, bonjour, this is Mike Leroux, founder of Dividend Stocks and passionate investor. Welcome to this Dividend Uncut report of the day. This morning we just had the number of job claims. We have 3.3 million in the US, and actually doesn't mean much because the wide range of expectation were like between $800,000 to almost 5 million. So basically all analysts were just saying, well, I don't know, man, I don't know what's gonna happen, and those are just like the first numbers we're going to get. Expect more job claims going forward as well. That's not really a surprise. I'm not expecting the market to move on that part either. Future this morning were in the red, so hopefully I'm jinxing it and then it's gonna go the other way around during the day. We saw that yesterday as well. It went in the red and then like way up in green and then go back to almost not more gain. Expect more volatility. You know, it's not because we have 2 days where it's not doing so bad that we are at the end of the volatility. I expect a lot more. The peak of this virus hasn't affected North America yet. It's quite obvious. So it will all depend on how it's going to go down. Now, today's topic is how you can invest your money right now. I think that you have to put your money into 4 different categories in order to know exactly what you're doing. So the first category are safe picks. By safety, I'm talking about, you know, companies with like basic needs. We're talking about Walmart, Costco, Amazon. In the Canadian side, you have Loblaws, Metro, Empire. Those companies are basically selling basic goods, lots of foods, and they will continue to do their business. I don't think they're gonna try, but if you want to protect your money, this is an obvious way to do it. Obviously, no secret here. I'm pretty sure you already know that. Then you comes into the safe business. So businesses that have been hit by the market right now, they're probably trading at a good deal, and that they should do fine going forward. I'm thinking about sectors like utilities, railroads, healthcare. You may find some interesting things in the automobile section actually. I'm thinking about GNTX. GNTX has no debt and is a dominant player in the mirror. Genuine Parts, they're selling auto parts. You know, if we enter in a great recession or a depression, people will not likely buy new Ford trucks, but they will certainly want to maintain their car and repair it, right? So car parts, I'm pretty sure they're safe, and Genuine Part has been killed on the market. So those are companies that will keep moving on, but at the same time, they represent a great opportunity today because they follow the wave. You know, when the market is a bull market, it's like a wave. It gathers everything from the bottom of the ocean and then it lifts it up. So when you look at the top of the ocean, you don't know what's good and what's bad because everything is floating. And right now we're in a crash. So this means that the wave is crashing like this and brings everything down to earth. So regardless if it's a good thing or a good business or a bad one, then there you go. Everything is on sale, but make sure that you don't pick bad stocks either. The third category is educated guess. This is where you have a little bit more risk if it goes sideways, but obviously the return is a lot more interesting. I'm thinking about Canadian banks, for example. We have seen that in Europe, some countries are asking banks to stop buy their share backs, stop dividend increase. It may happen also on our side. I'm thinking Canadian banks are a good value right now. The federal government will back the banks as well, as I mentioned in my previous video. Another place that you can look at is REITs. Depending on what you see, I've seen a lot of senior housing REITs that are going to get crushed on the market, mostly because if they get case of infection, this thing could spread quickly and then it will be catastrophic for those companies. But if they follow strict protocol and they are doing their job right, this is your chance to pick up companies like Chartwell in the Canadian side, or National Health Investors on the US one that have lost like 50% of their value, and that could go up quite easily as well. And finally, Falling knives, thinking obviously about the energy sector or any businesses that was running into some kind of problem prior to this crisis. The energy sector is just crazy right now. Yes, you can definitely try to make a bet on that, but keep in mind that if you go more than 5 or 10% of your portfolio, you're just gambling with your money, you're not investing anymore. So I say yes for falling knives, but 5-10%, not more than that. There are falling knives that are obviously more interesting than others. Make sure that you do a little bit more research. Go back to the investors presentation, the quarterly earnings, to read a little bit more about their debt solvency ratio, quick ratio. Want to make sure that short term they are able to sustain, they have enough liquid assets, or they have access to a line of credit. But this again will be complicated going forward. Don't put too much money in it. I hope that you have enjoyed this video. I'm trying to get them very quick so you can start your day and then watch the market fall or rise depending on the day that we have. This is a small preview of my webinar that will happen today. If you're watching that tomorrow or in another day, you're not late. You can still register to a webinar and watch the replay right away. I put the link in the description button. We have over 800 people that have registered so far on this webinar. It's going to be very nice. I'm sharing my strategy. I'm sharing more stock picking ideas, obviously, and you'll obviously get an offer to join. Oh, there, Dividend Stocks Rocks. All right, so stay tuned. Subscribe to my YouTube channel to get that daily update in your mailbox whenever I publish it, and we'll talk to you tomorrow. Stay invested. Cheers.